Thank you very much. Good evening, everyone. Thank you for joining Q1 FY21 conference call of Bodal Chemicals Limited. I have our CFO, Mr. Mayur, with me as well on the call. I hope all of you have got an opportunity to see our financial results and presentation filed with stock exchanges and are also uploaded on our website. First, I will highlight the industry scenario and our business strategy, and financial performance will be taken up by Mr. Mayur later on. The lockdown in the country for around 40 days from March ending due to COVID-19 significantly impacted our business in Q1 FY21. We started our partial operations from May beginning, but there were issues with respect to labors, transportation and lower demand across the globe. The prices of our raw materials as well as finished goods came down in Q1 FY21. During Q1 FY21, the average sales price of VS was 163, NH acid was 347. The business scenario started improving gradually from mid of June 2020 in terms of better demand, higher utilization of plants and more dispatches. The prices of our finished goods improved after June 2020 due to increase in demand and few supply side disruptions in the domestic market. The current prices of vinyl sulfone is around 160 and NH acid is around 355. We believe demand should further improve gradually going ahead because along with India, many countries globally have also opened up. On the business strategy front, we are committed to increase dyestuff share in total revenues and further integrate our business, which should lead to stable margins and increase in profitability in the coming years. Due to lockdown in country and decline in the demand of our products, total income for Q1 FY21 declined by 64% at 117 crores. Sudden decline in the prices of our finished goods and purchase of raw materials at higher prices impacted the gross margins. We did not cut salaries of any employees during the lockdown and even under uncertain business environment. All these led to higher operating expenditure and loss for the company in Q1 FY21. On the subsidiary side, we are near to completion of all the safety related changes at Trion plant and we are confident to start operations from September 2020 at Trion. We will start BS plant at SPS once the demand scenario improves. We believe this was one-off quarter impacted by lockdown in the country. Performance of the company should improve from Q2 FY21 onwards. We are confident that all the facilities in which we have invested in last few years and are underutilized currently, like dyestuff capacity, VS at SPS, thionyl chloride plant, Trion plant, and cogeneration power plant, will have higher utilization gradually and add to profitability. We believe we shall reach to earlier achieved peak of our financial performance once utilization levels across all plants improve in coming 12 to 18 months. Thank you, and I would now request Mr. Mayur to take up the financial performance in detail.
Thank you, Ankit Bhai. Good evening to all. On the quarterly financial front, our standalone total income declined by 64% year-on-year to rupees 1,171 million. Our standalone EBITDA loss stood at rupees 139 million, which was impacted by higher operating expenditure as highlighted by Mr. Ankit earlier. Our finance costs have increased year-on-year to rupees 27 million, mainly due to higher utilization of working capital limits. It is declined by 10% quarter-on-quarter. The loss before tax stood at rupees 229 million and deferred tax led to loss after tax of rupees 171 million. Our exports stood at rupees 419 million and its share in total revenue was at 38% in Q1 FY21. During Q1 FY21, inventories level come down to rupees 1,524 million from rupees 1,855 million in Q4 FY20, and trade receivable come down to rupees 2,409 million from 2,942 million in Q4 FY20, leading to improvement in working capital. On subsidiary front, SPS posted revenue of 4.2 million with loss of 20 million in Q1 FY21. Tryon posted loss of rupees 20 million in Q1 FY21. We are committed to minimize the losses at subsidiaries going ahead. Thank you, and now I open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, please press star and 1. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The first question is from the line of Aditya Khetan from East India Securities. Please go ahead.
Hello, sir. So my question is on the vinyl sulfone and the H-acid prices. So the current prices of vinyl sulfone you said is around 160 rupees per kilo. And during Q1 also the prices were around 163 rupees per kilo. Am I right on this number?
Yes, you are right. The Q1 average price of vinyl sulfone was 163.
So there has been not an improvement in the price, right, sir, currently?
No, actually in June the price went even lower than 150 levels.
Okay.
From that point on, it improved currently. So in June it was at around 150 and even lower. And from that level now it is now back to 160 plus levels.
Okay. So what gives you confidence that the prices will sustain? Are you looking that the textiles demand is coming back, or what is the dye stuff scenario?
I think overall, if we look at our volumes and our dispatches, May was very dull, but then June was not bad. June we had around 65-70% of the sales level, and again in July also it has improved to 75% plus. So we see a continuous improvement in the demand from textile and other sectors also. Because our export is around 40 to 50%. It's very important that all the other economies also open up, which has been gradually improving in the last 2 months. So what we feel is, regardless of COVID situation, I think the globally, governments don't have an option but to open up the trade and open up the country. So that has been improving every week since May mid, since we started our office and most of the plants.
Okay. Sir, what would be the current utilization levels and what was in Q1 of dye intermediates and dye stuff both?
The utilization in Q1 of dye intermediates was around 20%. So currently it is at 78-80%. There is a huge gap there. Then dye stuff it was around 15% in Q1 FY21. And currently it is around, for the month of July, it was around 40-45%.
Okay, so dye intermediate utilization is 78%?
Yes.
Okay. Gotcha. And sir, on the Tryon business, you said, so previously we were said that the plant will start in Q1. Now it has been shifted to Q2 around.
So this is all actually due to, we were supposed to receive some mechanical items from China, because this is the only one-off plant in India, and it was set up with the help of some Chinese consultants. So we had identified some issues regarding some safety and some other issues. So last few months we were working on that only, and our shipment was at Nava Sheva for a while. So we had issues during the lockdown. So that's what the lockdown has delayed the entire process.
Okay. Sir, in Q1 we were said that because of the weak demand, you had put your capex on hold. So now, have you all planned any capex for the year, and what would be the amount?
No, we are currently working on that. In which combination we should go ahead. So earlier, as earlier mentioned about a few months ago, that we had deferred the original plan of setting up a caustic chlorine plant and some other chemicals. So that has now been deferred for sure, and we are currently working on some other combinations of organic chemicals and specialty chemicals. So we will come out with the plan very soon. But looking at the current situation, we don't want to be too aggressive to start the investments, to start the spending.
Okay, so in this year, so we will incur mostly the maintenance capex only, and what?
Just the routine capex that we have around 20 to 30 crores annually. That will be the only capex. We are not planning to increase any capacity or setting up any new plants. But obviously, our target is to start some activity at our new site in near Dahej. That we are planning to at least it depends on how this COVID situation changes. How fast it changes. But obviously, our target is to start the activity in few months. By the end of this financial year, we want to start spending and start setting up the plants, because the process will be 1.5 to 2 years.
Okay. Okay, sir. Thank you, sir. That's all from me.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Rohit Nagaraj from Sunidhi Securities. Please go ahead.
Thanks for the opportunity. So a couple of questions. One is in terms of our HSE practices and zero liquid discharge plants. So how are we currently across our facilities in terms of our environmental facilities and on the safety front as well? Because we've seen in the last few months there have been a lot of incidences which have been happening across the chemical industry. So how are we placed on that front?
In last few years, we have been very clear as a policy matter within the company about the safety and environment, because these two things, like you said, matter a lot. Environment can give us issues in terms of closures or not able to operate the plant. So that's very risky for us. Also safety, like you said, since this COVID situation, unfortunately, there has been many accidents across India, mainly in Gujarat area. So it's very unfortunate. But what we have done, we also had a small accident 2-3 years ago in one of our plants in Ahmedabad. So since then, we have improved our overall policies even more. We also have a director on board that is specifically has been elected for the purpose of HSC. So that's our approach. And as far as the environment goes, at our main plant, for intermediates, we are a zero discharge unit. So there is no issue there. And also for a diced up production, we have set up a multiple effect evaporator. So we are totally complied as far as the norms or the requirements of the government bodies go.
All right. That was good to hear. So secondly, in terms of the demand, so what would be the trigger from increasing the demand from base level, both in domestic market and international market? And an allied question to that, whether we have seen small players going out of the business because of the working capital requirement or the plant being shut down for a fairly long time and they were unable to sustain during the last few months. So have we seen any kind of such phenomena?
Yeah, so like I answered in the first question, the demand definitely has been increasing, because the numbers I told you is not our production numbers. The numbers are actually come from the sales numbers. So in June we had about around 65% of our compared to the last year's turnover. Again in July we had about 75%. So that shows a good sign that obviously there has to be a demand, otherwise we won't be able to sell or dispatch. So there we are continuously seeing improvement, domestically and internationally also. And as far as the smaller players go, it's a very important point that during lockdown, in month of May, we were able to start with the permissions, getting the permissions from the government. But some of the smaller competitors, especially here in Ahmedabad, who are located in the industrial estate, 2 or 3 key players did not start their plants. So they did not start until July end. So this is a very clear sign that, in the time of competitiveness or very low margins, it's very difficult for non-integrated or a single location, single product kind of players. So that really actually happened between May to June and July. So that's actually the reality of the trade, because few players have been integrating, have become a single location players. So players like us, we definitely have some advantage over some of the traditional players, who are still there in the smaller units or multiple smaller units across different sites.
Thanks for that. So one last question in terms of the backward integration initiative. So we have already done that in sulfuric acid. Any other initiatives, and during this last 4 months, have we taken any steps in terms of cost optimization or on the digitization front? Because we have seen the manpower has been one of the constraints which has also impacted the overall business.
So there is not much room for digitization because half of our plants are already operating on DCS systems. So we already have a very upgraded and latest systems, like companies from Honeywell and Yokogawa, etc. So I think as far as the digitalization of plants, I don't think there is much room. And most of the other plants, half of the other plants are batch type. So there is no room for DCS systems and all. We did have some issues regarding people, the labor that's involved. Especially because, many of the migrated people left for their states and, most of them have not come back. So we did have an issue there, but we have a great image in our area in Baroda at our main plant. And we are able to, source local people who are open to, do any kind of work that we require. So we are able to manage, obviously there were issues in the beginning. But looking at the July numbers, I think those issues remain, but I think not where the issues can actually affect the performance of the company.
All right. Just last one clarification. So at what utilizations level will we be able to break even? Because certainly in last quarter was a different story altogether. And on the inventory in the distribution channel, whether the inventories have relatively come down or dried up, and probably once the demand slightly improves, again, inventory restocking will happen.
It's very difficult to tell the break-even, production levels for us because finished good prices and raw material prices don't have a direct connection because, most of the raw materials that we use, they are not only produced or sold only to cater to our sector. Most of the raw materials also cater to other sectors. So their relation is not very direct. So the control over the prices of raw materials or finished goods, they really vary. So, for example, currently, obviously the finished good prices are low on the lower side. At the same time, raw materials are also on the lower side. 1 or 2 months ago, some of the raw materials were at probably 5 or 10 year bottom, which have improved because the demand has improved. So it's very difficult for me to come up to any number which can be a break even number.
All right. And on the inventories?
Backward integration question that you had asked. So we do not only sulfuric acid, we also produce some other chemicals which are backward integrated. So, for example, thionyl chloride, the plant that we have set up recently, that is also backward integration. In sulfuric complex, we have another 3 or 4 products which we captively use about 20, 30, 40, 50%. So, and also there is another product called beta naphthol. That is also our captive product integrated into making our dye intermediates. And also we integrated the entire complex with a common utility system which replaced all the old multiple boilers and which also replaced the more expensive power that we were buying from the electricity board. So that also we have recently done. Utilization in the power plant has been not bad. Its average must be around 70-75%. But there is a room to improve about 15-20% there also. So we are trying there. Thionyl fluoride also has not been very smooth because plant and quality is not an issue, but the demand levels and this COVID situation has again affected it. So again, we only had a utilization of around 50% last month. So there also there is a lot of room to improve, take it up to about 80-90% levels, and continuously lower our expenses overheads on that front.
All right. Thanks a lot and best of luck, sir.
Thank you.
Thank you. The next question is from the line of Sriram Srinivasan from Sincere Syndication. Please go ahead.
First of all, thanks for the opportunity. As you said earlier, the response another question from the another investor or analyst, what did you say that the vinyl sulfur's cost was improved from 150 to 163 during the 1 month of difference, right? If I'm right, means what will be the cost of the vinyl sulfur over the period in Q1 FY20?
You are asking for the cost of vinyl sulfur in FY20?
Yeah, in Q1 FY20.
Hello?
Yeah.
See, what your question is, the difference prices.
What is the difference? Yeah, what is the difference in between the realization? What is the growth or degrowth in numbers of realization?
I understand your question, but see, 12 months is a fairly long time, and the prices of raw material are fluctuating in chemical industry. So to give a specific number is very difficult. See, sometimes what happens, last year we were selling vinyl sulfone, say in Q4, more than 200 rupees. At the same time, in Q1 of current year, the prices were 160 plus something. But that doesn't mean that our profit has eroded more than 40 rupees. Prices of raw material has also fallen. So to give a specific number of a cost for vinyl sulfone is difficult.
Okay, I can understand. Okay. Sir, another question from my side is that what is the shift from China to India in terms of the chemical industry boosting so far from the government initiatives? How things are ramping up on your side? How do you think this will work for the industry?
Yes, so there has been a lot of talk, a lot of tweets also officially coming from CNBC and etc. for last about 30 to 45 days. There's been a buzz about government coming up with some very positive policy for new investments regarding the chemicals and the chemical sector. But we are also waiting for that. There's been nothing, no exact plan has really come out from the government. But for pharma, they had come up with a plan, I think about 15-20 days back. So that was very useful, for new investment. So I'm hoping for a similar kind of policy or help from the government, for the chemical growth also, because we do have a large piece of land. We also have some other land also, which we are eager to, start some, our growth factors there. So I think it's a good timing for us because most of the time these policies or the new announced policies from the government involves greenfield projects. So if any company wants to expand, that's usually not covered in these policies. So we are at a stage where we have not started any work. So and we have an option of multiple sites. So I think we are at the right time. If government comes up with some positive policy, we can definitely take advantage of it. And overall, because of some issues between the governments of India and China at the Kashmir borders, there was a lot of hype regarding India may ban chemicals or may ban many items that come from China. But practically, I don't see that happening much because it will not be possible. If you look at the WTO norms and stuff, and also just the way how Indian industry depends a lot on Chinese raw materials. So I don't think that will be too big of a step to ban any chemicals. But the government can definitely probably impose some extra duties on some of the chemicals. And then that way it can help the domestic industry. So in that case, if something like that comes up with some anti-dumping or some extra duty structure, then we can definitely benefit because we definitely compete with the Chinese. We definitely compete with the materials that are imported from China in our intermediate segment.
Thank you. I would request Mr. Srinivasan to rejoin the queue for follow-up questions. The next question is from the line of Dipesh Mehta from SBI Cap Securities. Please go ahead.
Yeah, thanks for the opportunity. I dropped out in between, so I am not sure whether you provided this data, but what was the HSD and VS realization for the quarter?
For the Q1 FY21, the HSD average selling price was 347 per kg, and for vinyl sulfur it was 163 per kg.
And where it would be right now trading at?
Currently, they are HSD has increased a little. It's around 350 levels, 355 levels actually, and vinyl sulfur is about same price. But the production level has really picked up. So the intermediates production level is now around 80%.
Okay, and now earlier our HSD and VS used to contribute almost 40% when HSD and VS prices were substantially higher. Now, what would be the contribution from these two relatively volatile commodity for us?
No, it is still in the same range. The contribution that comes from H and VS, it's still in the same range. It's around 40% of our top line.
Okay. And whether this price, now considering overall raw material scenario, we make some money or it is hardly break even for us?
I think that there are some slight margins in these price levels also, because the raw material side is still on the lower side. So I think more important point is we take the utilization higher. In dyestuff, the utilization is still not great, not compared to intermediates. It is not that high. So overall at a company level, the utilization level we need to increase, so that way we can avoid a lot of extra cost. And at this level, yes, to answer your question, at this level, I'm sure there's some small margins are there.
And earlier, last quarter call, you alluded about some of the capacity moving out of the market or likely to move out. Those capacities return to market or yet not? And any benefit or any price support you are seeing?
No, so there were two plants which were not operational, and so one of them has not started, and the second one has started just very recently, I think 2 days back. Okay. And there is no movement in the price so far, because it has just started, and I think there is also a captive base. So since it is a captive base, so the entire plant was shut down. So when they start their intermediates plant, that they'll also start their dyestuff plants. So that way, it's not going to be a lot of materials that's going to come up in the market, which will disturb the prices.
Understand. And sir, from demand perspective, by when you expect some kind of normality to return, kind of thing, from overall demand trend which we are observing over last few months? If you can provide some perspective. And then last data related question, what will be the debt and inventory position, if you can provide that data?
I think I have July numbers with me, and July numbers are very giving a lot of confidence to us, because earlier in around May, when we were starting the plants, we were not sure what kind of utilization we will be able to reach. So within just 2 months, we have reached about 75-80% in intermediates, and even the other numbers are basic chemicals is at 100%. So overall, I think we are at around 65-70%. I think, which is not bad. And what we observe is every week it is improving. So I think that by Diwali, we should probably reach around 80% levels at a company level. So which should be good solid numbers, which should create some good margins also. And for the debt and inventory, let Mayur answer that.
As far as inventory level is concerned, it has reduced drastically because some production was lower and the demand was also lower. So whatever we could sell, that is some part is from stock. So inventory level is reduced. And as far as debt level is concerned, that has also reduced to some extent, because the recovery from customer was very good than what we have expected initially. So as far as fund inflow, that was good, and outflow was a bit limited. So there was some improvement as far as debt is concerned. So
can you tell the number?
Improvement means it has reduced.
Can you say exact number, or maybe I can take it offline if it is not ready?
You can take it offline.
Thank you, sir.
Thank you. The next question is from the line of Nav Bharadwaj from Anand Rathi. Please go ahead.
Thank you for taking my question, sir. I had a brief question as to, my understanding was that we do not import any raw material from China. Is that correct?
So we do import some chemicals. There are a couple of intermediates which we require for our dyestuff production that are not actually produced in India. So for those 3 or 4 chemicals, we do depend on Chinese. Other than that, in our imports, there are options in some of the chemicals where it is available in China, but there are other options also. So there we don't depend on the Chinese companies, but only for these 3 intermediates which are required, which are not produced here, there we have to buy from China.
Would you be comfortable sharing as to the critical ones, as to what percentage of the raw materials will they be?
No, it doesn't want the names. No, the percentage is hardly 2-3%, because those are required to be produced for some special colors. So not for any of the high volume dyes items. Okay. So obviously that is why it has not been developed here, because the demand here is very small, and that's why we have also not started captive manufacturing of the same, because the volumes are very small.
Great, sir. Thank you. The other question would be, sir, there have been a few new companies which have been, granted clearances for, setting up new plants in dye chemistry, like Mac Dychem right in your backward, I think so in Vatva, Ecofine in Bharuch. So, what I wanted to ask is, with the current subdued demand, with newer capacities coming up, how do we see the demand supply inside India panning? And as you rightly said that, the Chinese imports are going to continue even in the future, with, we already being there and the new capacities coming up. How do you see this coming up, the demand supply equation in the, say, year or two?
I think if you leave the COVID part apart, then I think there is a consistent demand of around 4-6% that comes from the textile industry globally. And our particular trade, because our dye stuff which goes into textiles, which is the higher number among our dyes business. There, it's not only domestic business, but it's also mainly international business, because we supply dye stuff to all the textile hubs in the world. For example, Turkey, Bangladesh, and then Pakistan, Indonesia, and China. China actually has a model of self-reliance. So China has had most of the production produced there. But earlier they used to because couple of the reasons why, because China was very aggressive in growing up the manufacturing sector, and also there was an opportunity. So China took a lot of the global share in terms of dyes and intermediates and all. But so they also grew rapidly, I would say about 10 years ago, 15 years ago. But because of the environmental issues that came a few years ago, the growth has not been great in China. So because of their national level policies regarding the environment, and because of a lot of the restrictions that have been implied, the growth of that sector has hardly happened, I would say. So that's why the Indian companies which are already producing these products in these cycles benefited, a few years ago, and that continues to, give the opportunity to the Indian players. Obviously, there were some extraordinary prices that happened for 3 or 4 times because of the closures of plants in China, but that doesn't happen anymore. But still, because now there is no more pressure from China, and China not being keen to grow in some of the sectors, I think the Indian players, especially the integrated ones, definitely have the opportunity, because Indian companies have definitely increased their their share in the global markets, and I think they continue to do so.
Great. Thank you for such a detailed answer. And lastly, sorry, but my line got a little scratchy. You're talking about some capex in Dahej. Could you please outline the capital outlay and products and the timelines that you're thinking on the same?
So earlier we had announced capex regarding a chlor-alkali complex and also some of the specialty chemicals including within the same complex. But we had actually deferred that plan. So we had announced that pre-COVID. And during this lockdown and now post-COVID era, there are definitely some changes, but we have not announced it. We're not finalized yet. So hopefully, within a couple of months, we'll be able to announce, our exact plans. But definitely, it doesn't include chlor-alkali anymore.
All right. Fair enough. Thank you so much, sir. All the best going ahead.
Thank you.
Thank you. The next question is from the line of Aman Soni, an individual investor. Please go ahead.
Yeah, hi sir. I just have one question. Can you help me with the realizations and the price of TCL in the current quarter and the previous one?
What's your question? TCL? Sorry, can you repeat your question, please?
The price of phenyl chloride in the current quarter and the previous.
Okay, phenyl chloride. The price in the current quarter is around 11 rupees per kg. That's the average market price right now.
And what was it in the same period last year?
In the same period last year was around in the range of must be around 15 to 20 rupees, between somewhere there.
Okay, and what was the realizations in the current quarter for the same chemical?
So in the currently it is around 11 rupees. Yes.
No, the realization.
Realization is the selling price, right? So for that product, when we sell that in the market, we are getting around 11 rupees per kg.
All right, thank you. That's it from my side.
Thank you. Anyone who would like to ask a question, you may press star 1. The next question is from the line of Rajesh Sarda from Exim Script. Please go ahead.
Hi, sir. What is our consolidated debt at this position? And hello?
Yes. Can you repeat yourself, please?
What is our consolidated debt figure?
Consolidated debt. That is around 150 crore.
And have we availed any moratorium?
No, not at all. Not even in interest or not even, we do not have any term loan, so that was out of question. But even in interest also we are serving regularly. We have not taken any advantage or any moratorium.
And okay, sir, that's it.
Yeah, thank you.
Thank you. The next question is from the line of Aditya Khetan from East India Securities. Please go ahead.
Hello, sir. Sir, my question is on your one of your subsidiary, which is Tenor Boya Kimia. In that, I'm looking at the annual report. The sales of materials is recorded as 39 crore, whereas the receivable spending are 35 crore. I would like to know what is the position of the subsidiary and in what business the subsidiary is into.
Let me explain your observation. See, in Turkey, this dye stuff, when we sold in the local market, over there, credit period is a bit higher compared to what we have in India. Sometimes it goes beyond 6 months to even 9 months also. And the higher level of realization you look at because of the higher turnover, which was happened in last quarter itself. So over there, credit period is a bit higher than what we have over here. But what happened over there, see, we get checks from the customers. So it's kind of post-dated check. And the system over there is like that. Whenever you issue a check, it has to get cleared. Otherwise, it's a very big criminal offense. So normally nobody dishonor their check, and whatever we receive check, that get honored. But yes, credit period is a bit higher compared to what we enjoy in India.
Okay, so in what business is the subsidiary into?
Yeah, it's into distribution of what we produce here, mainly dye stuff.
Okay.
It's a kind of marketing arm for us.
Okay. Yeah. And the second question is, I'm looking that a good amount of loans are being given to the subsidiary of SPS Processors, that has increased from 42 crore in FY19 to 75 crore. Whereas I believe the revenues and profitabilities are very less. In fact, it is putting a loss on the SPS Processor side. So can you help me with the asset and liabilities of this subsidiary?
Yeah, in subsidiary, see, vinyl sulfone plant, what we built is from Bodal's fund only. And at the same time, whatever working capital require increase over there, that is also being funded by Bodal. That company is a debt-free company. We are not enjoying any bank limit from there. So whenever there is a slow period, demand is low, fund do get blocked at inventory level as well as at the receivable level. So that is being funded by Bodal. That is why this has increased.
Okay. Are you confident that the money given to your subsidiary would be repaid back, considering the demand for the next 2 years of vinyl sulfone and H acid?
Definitely. There is no question about it. It will be repaid.
Okay, sir.
Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Shantilal Patel from Shanti Patel and Associates. Please go ahead.
Hello.
Yeah.
Yeah, I just wanted to know who are our main competitors in terms of production and the capacity which we have built up, and the sales, if possible.
I think some of the main competitors which have high capacities like us in the trade, I think one would be Qtr1 Industries.
Correct.
And second, Bodal Chemicals Industries Limited. But they are more focused on the dye stuff.
Correct.
And also third one is Colortex, which is in South Gujarat based. But their focus is even more on dye stuff than Bodal Chemicals. And a similar model to ours would be Qtr1 Industries and Sri Pushkar. So Sri Pushkar also has a similar model as ours, which has a 3-step integration.
So impliedly, main is Qtr1 and Pushkar, correct?
Yeah, if you look at similar business model, yes.
Okay. Thank you very much.
Thank you.
Thank you. The next question from the line of Rajesh Sarda from Exxon Sorry, we lost this line. Ladies and gentlemen, you may press star and 1 to ask a question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, if you wish to ask a question, please press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Mayur Pathia, Chief Financial Officer, for closing comments.
Thank you very much for attending our conference call. And if anyone's question remain unanswered, they can directly contact me, and I'll be happy to answer it. Thank you and goodbye.